G'day everyone, welcome to this weekend update, and we've had a really important week just gone. Would appear that the US market has not even really gone through a correction and is headed higher again now. And really importantly for markets, the Fed meeting is coming up on Thursday night, so that could well be a real market mover, but at the moment the market doesn't seem to be too worried about it. So really important time, lots of opportunities, and that's really what I want to cover in this particular video. So just a quick overview to start. I'm not even sure you'd call it a correction, but whatever it was, a bit of a mild retracement, it does seem to have finished. Now, it's not an absolute guarantee, and there could be some fireworks next Thursday night, but just looking at the charts, putting all other things aside, you've really got to say that the market is on its way back up again. Now, we've had a really solid year of gains, predominantly in the non-resource area, and there's now going to be some new sectors joining the party as well. So, not only some of the older sectors that have been providing some terrific profits still going along quite well, but we're going to see some terrific opportunities in new areas of the market. Now, there's always a wall of worry when markets go up. It's just the way the human psychology works. It seems people need to have something to worry about. We've got concerns over China, the Middle East, America, gold, all sorts of things. But look, these will all be resolved. That they always are, and in fact, pretty much China is resolved, it would seem to me, and the data coming out of there now is really, really solid. But the key point is that markets start rising long before the news gets better. So if you're sitting there waiting for the news to get better and for things to become more certain, then you're going to miss almost all of the gains that are to be had. So the whole message behind this video is that the time to act is now. If you've been sitting on the fence, then now's the time to make a decision and get off the fence, because these opportunities don't come along very often. So let's have a look at the weekly summary. The S&P ended up gaining 33 points on the week, which is a pretty solid performance. So just viewed in isolation, it would appear the correction's over. We'll have a look at the chart in a minute, but markets just seem to hang on every word that the Fed has to say, and that will be the case again in the latter half of next week. I believe all the Fed can do, if they do anything, is some mild tapering of their bond buying program. They might pull it back from 85 billion a month to maybe 70 billion or something like that. But whatever it is, it's probably already factored in. Markets have a very good habit of doing that. So there really shouldn't be any adverse reaction to any Fed announcement during the week, but you never know. So let's have a look at the chart of the S&P. So let's just pan back, take a bigger picture look. You can see there's been a very, very powerful rally in progress since around October of 2011. And then we had a dip in the middle of 2012, and then another little dip towards the end of 2012, which was in November. But basically it's been a very, very powerful rally now for quite some time. And you can see that we had really very little pullback in the S&P from November through till about April. We then got about a week to the downside, but still really not too much. And you really have to advance forward to the late May, June correction before we had anything of greater substance. And as you can see, previous little corrections were just a single leg of about a few days or a week to the downside. In late May, June, we then got the typical ABC pattern, which is more characteristic of a correction. So the A leg to the downside, then a B leg partial rebound, and then the C leg to finish the correction. Still wasn't very deep though, didn't even get down to the 150-day moving average. The market then moved on again, formed a new high, and I was expecting that this correction would be probably a bit more so than the June one. So we had our A leg to the downside, we got a very small rebound, a slightly lower low, but it's now taken off again. And you'll notice that just in the last couple of days that we've now formed a higher high. So we've now gone above that high point. So by definition of trends, that has now moved back into an uptrend, as amazing as it may seem. Now for the August-September period, this is an incredibly shallow move to the downside. I won't even call it a correction because I don't think it really constitutes as one. Now there is one alternative way of looking at this, and this is still a possibility, but I'd say it's a slim possibility, that this is the A leg. We're currently in the B leg, and that we've still got a C leg to come. Now I don't believe that that is the way that it's going to pan out, because there just seems to be more strength in the market than that, but that is still a possibility. But certainly the odds have improved quite dramatically that that this period of weakness in the market is probably drawing to a close. Let's look at the Aussie market. Our market index gained 75 points on the week. As you know, I don't place a lot of stock in the Aussie index. I don't think it tells you very much. It's only reflective of about 8 stocks, and it's certainly not reflective of the sort of stocks that we've been making money out of all year. But nevertheless, our index gained 75 on the week, formed a double top, and most stocks are just marking time. That's really the bottom line. So let's have a look at the Aussie index. So pan back, get a bit of a bigger picture look. So you can see there we've formed a double top with what we saw in May. It was quite a deep correction in May, June, much more so than in America, and it's now jumped back up again and is sitting at that same level again. But yeah, as I said, I don't place a lot of emphasis in what the ASX 200 index is doing. I just don't think it means a great deal, to be honest. Now looking at gold, and this is really important, the big picture in gold, and I want to look at this from 2 levels. One a bigger picture level, and the other one a shorter term level. The technical patterns from a big picture point of view are behaving very predictably at this point in time. The move up from the bottom that we saw at 1190 has been so strong that it suggests that a new bull market is starting. And I've got a target of around about 1565 in the medium term. We'll take a look at that in a minute. But for that target to come into play, the confirmation we need is a move above the recent high of 1430. So the next wave, and I'm talking at a big picture level, the next wave is likely to be extremely strong, but please bear in mind we're talking here that about several years to play out. So this is not something that's going to happen in the space of a couple of months. So this is quite a big picture view that I'm talking about here, but we'll come back and take a look at that in just a minute. Let's just narrow in a little bit and look shorter term. Now, for me, the retracement that we're in the last 4 or 5 days is basically a retracement we had to have. The gold price had moved very strongly and it had got overbought in a pretty short space of time. However, there was a support level at 1340 and the price of gold just went straight through that without even blinking. So the ease that it went through that suggests that we've still got a bit more downside work to do yet. So 1284 I believe is still likely. Now the other part of this is if the bigger picture scenario that I've painted is going to be valid, then the rebound should come fairly quickly. So let's take a look at the price of gold. We'll look at it on a daily chart, I think is the easiest way to look at it. So we had this this massive decline from the peak. We formed a low down here at 1190 and we then moved up a bit hesitatingly at first, but then very sharply. Now resistance areas were at 1422 potentially and then 1493. We went slightly above 1422, but look, only by about $10, and then promptly reversed. Now you can see at that point that the RSI was significantly overbought, so when we were sitting at resistance, so we really needed to get a bit of a pullback. Now, where does it pull back to? Three potential levels: 1340, 1312 and 1284. I thought, given the strength of the move, that 1340 would be about it, but as you can see, it just blew straight through that in one session. We've paused a little around the 50% level, but I think, looking all things considered, I think we're probably heading to this 1284 level. Now, if the bigger picture of what I'm talking about is to be valid, and let's pan back and look at the bigger picture. So we had a rundown here from October 2012 at just under 1800, went down to 1190. You can then expect a rebound to one of three levels as indicated there: 1422, 1493, 1564. We've got to the first one, we've pulled back. So that structure is holding together very nicely. Now, if we are going to kick on in the medium term and get up to 1564 over the next 6, 12, 18 months, then this little bit here, this little decline we've seen in the last week or so, needs to turn around fairly promptly. I'd want to see gold bottom out around 1283 and then start to head fairly solidly to the upside. And confirmation of the bigger picture structure that I've mapped out here would be a close above 1430. So we need to close above this high point of the 28th of August. So that's where we are with gold. Let's have a look at the GDX index. We had a little inclined support line. We've basically held that for the time being, and bear in mind, gold stocks will tend to go up before the price of gold does. It's certainly taking a lot longer than I expected. I thought after about 3 or 4 weeks ago that gold stocks were underway, but you've always got to remain open-minded and just go with what the market is indicating at the time. There's still a bit of an uptrend. I'm still of the view that we'll see gold considerably higher, and we'll see major opportunities in gold stocks, but it's certainly a little bit hesitating at the moment. And if we have a look at this chart that I've been looking at now for some time, which is the gold price divided by the GDX index, or sorry, the other way around, the GDX index divided by the gold price, then you can see that it certainly seems to have based. So gold stocks have stopped falling faster than the price of gold was. Looked like it was underway about a month ago, but still not so, had another little bit of a decline. So we're still playing a bit of a waiting game with respect to that. So shorter term, we're looking for 1284 to hold and a close above 1350. So they're the shorter term signals that we're looking for. So overall, gold didn't have a good week, was down $62. I think Syria had some impact on gold on the upside, so people got very enthusiastic about gold because of what was going on in the Middle East, and now it would appear that it's going to be a diplomatic solution. Then some of that steam has come out of the gold price. And also the Fed decision this next Thursday night will also be significant for gold. Now, copper slipped back a little bit, not much, but still trading around 320. Oil still holding steady around 108, so still pretty solid there. Here's the spot copper chart, beg your pardon. So you can see we're still in this range between 310 and around 340. So from an overall strategy point of view, it would appear that the US market correction, if you want to call it that, is probably over. I'm still remaining a bit cautious until I actually hear what the Fed has to say, because rightly or wrongly, markets seem to react to an extraordinarily stupid degree to whatever the Fed has to say. But as I've been saying for months and months and months, this is one of the best buying periods of the decade, is just about upon us. All sectors are going to offer opportunities. The sectors that have done extremely well, at the very least, are going to offer great range trading opportunities. and there's going to be new bull markets in some other sectors as well. Now, if you've been following these videos for a while, then hopefully you'll know that there's been a lot of calls that have worked out fairly well since the middle of 2012. So the overall strategy has worked out particularly well, and it's translated through to some great results that I've been communicating recently. Now, I just want to make a point really clear. I don't predict. To my mind, that's for fools and for people with huge egos. Predicting is just not something that I don't believe anyone can really do. If you predict and you get it right, then that's purely luck. All I do is I observe the market. I've got a structure that I'm observing it against, and I respond, and that response is based just on probabilities. Now, of course, 3 decades of experience in the market is a bit of a help as well. Now, I've been pretty forthright in the last couple of weeks because I've been doing these videos now for a long time, and hardly anyone was responding. So I decided to be a bit forthright about things, and it's been very pleasing that I'm now having more communication with the non-member audience, and that's certainly brought a few new members in to the organisation. But if you're still sitting on the fence, deciding whether you want to continue trying to do this yourself, then just recognise, please, you are staring at one of the best opportunities you'll ever get. And to develop these skills takes a lot of time and a lot of money, and these opportunities don't come along very often in a decade. Each month we run a live training session here in Perth. So anyone that is a resident in Perth, you're welcome to come along and see for yourself what we do. That's for a one-time only opportunity. The next Share Wealth Club meeting we've got coming up is this Tuesday night coming. So if you are in Perth and you are interested, then please contact us for details. It's a really insightful night. I think you'll get a great deal out of it. And just a reminder for existing members that you're very welcome to bring a friend along to those sessions as well. So if anyone wants to contact me, there's my email address, and hopefully we'll keep this communication going. And that's it for this week. Cheers.